Chris, thank you very much for joining us today. It's hard to believe 2024 is almost coming to an end and 2025 is just around the corner. So I thought it would be a good idea to sit down and spend a few minutes with you and get your thoughts on how investors should position themselves going into 2025. And before we go through the charts, I just want to remind our viewers that anyone who has an interest in you or following you online and checking out your services, we have a link below in the show notes so you can go and check it out. And the last time we spoke, it was early October, and so much has happened since then. You were very bullish going into year end. The S&P was at 5660, and you had a target of 6,000. We're pretty well there. The NASDAQ 100 was at 20,100, and you said 21,200 was your target going into year end. You also had concern about a double top. So why don't we take a look at these charts beginning with the S&P 500?
Yeah, sure. I mean, the markets are definitely moving kind of like they should. It's nice to have the markets what feel like there's somewhat normal market conditions. If we take a look at the chart of the SP 500, we can see here, obviously, we've been on this nice tear over the last several months. Seasonality wise, we're in a very strong time for for the SP 500 to move higher. If we look at just the seasonality chart here, usually the markets want to bottom out in October, and then we go November, December, we kind of rip to the upside for a strong holiday season. So that's kind of where we are. We're right here. We had an October kind of pivot low, and now we're starting to work our way up. And I think we're going to see the markets have another big pop and a push higher, kind of where we are right now in terms of just short-term price action. We've got this little pause, and that's because we're kind of stuck at this previous high. We see this quite often. You'll have a quick little pause when you get stuck at a previous high over and over again. And so what's happening right now, people are nervous. They think the market's going to top, but really all this is just a little pause, I think, before we have another pop and push. December could be a very strong year for stocks. I think we're going to see, people piling in FOMO. People are starting to get really bullish, and they're piling in the small cap stocks. Usually when the herd mentality goes crazy, that's usually also going to be a contrarian sign that I think January is going to be a pretty disturbing year or month for the turning point in the markets. But I like the market still. We're long equities, and they are pointing to higher pricing.
And so a couple of things I want to ask you about. First of all, so you think we're going to make another push going into year end, but do you have a target on the S&P?
Not so much a target. I mean, we can go back and look at this major move that we've had from way back here in October of 2023. If we go all the way up to this big correction, there's a couple different levels we could go to. This is the most conservative level right here, which tells us we should go to about 6150 on the SP 500, which is really not all that far away. It's actually perfect striking distance just based on this chart pattern. We should see this expand and move higher. So I think we could see an easy 2% move in the next big push. We could see something much, much larger if we were to use a different market low here. If we were to actually just go to this low that was here and we go up to this more significant pivot high, this shows us where there is potential for this market to keep ripping higher, which is obviously way up here. It's about a 10% move. It's 66, 6,700 on the SP 500, which could be like some massive blow off move of everybody piling in, potentially in the next month or through January, as everybody kind of has this FOMO and this kind of irrational price action where people chase things up. And we're seeing that in a few commodities, or we're seeing that in Bitcoin and things like that. We've seen it in gold. I think the big move in gold is more or less over temporarily. But that movement of everybody FOMO kind of chasing certain things, creating big moves, we could see that in the stock market. So there is still some pretty decent upside potential in the equities market. I think the large tech, the Magnificent Seven, are definitely pulling on things. They've had their move. There's going to be big tariffs in the semiconductor space, so that is definitely muting things and kind of holding the overall kind of market down a little bit. But the Russell 2000 is definitely kind of a little more free flowing, and we're seeing money move into those riskier stocks.
And you expressed concern about January. Why?
Well, I just feel like Trump's going to get in. We'll have the inauguration. I think this momentum, the seasonality wise, January is a pretty big month. Generally, if the SP 500 closes positive for January, we have a strong year, a positive year for equities. If it closes negative, we usually have a bad year for stocks. So it's going to be very interesting to see where it moves. For some reason, just based on price action and sentiment and kind of how things are unfolding, I just feel like it's not a technical anything. It's just kind of a gut feeling that momentum is going to fizzle out and kind of blow off come New Year's Eve. And January is going to be pretty volatile. So I want to see how January closes out. I think this market's getting pretty close to kind of a final push, a major top here.
So let's take a look at the NASDAQ 100. And as I mentioned earlier, the last time you spoke, you thought there was concern for a double top.
Yeah. Yeah, the Nasdaq's definitely struggling. Like we've got this previous high from earlier in the year. It poked up temporarily right when Trump got in. It fizzled right back down. It's kind of stuck in this pattern. Really, it's kind of a fairly short-term bearish pattern. These are all inside bars pretty much. You have this big red candle, and all this price action is pretty much stuck inside that bar. That's usually seen as a bearish pattern. So it drops straight down, it inches its way up, and then goes back to the lower end of the range. So the large techs aren't looking all that exciting, and they're kind of stuck in a little bit of a short-term bearish pattern here, a candlestick pattern. Now, hopefully, we'll see this turn up and start to break through and really get out of this blue box, because this blue box has a very bearish undertone. If we can break and close above this, then I think we'll be off to the races, and I think we'll see money start to move back in to the tech space again. But really, this huge pullback that we saw and the amount of time that it's kind of wasted has spooked a lot of investors. People are really nervous to get back into Nvidia. People are nervous about just this space in general. I think one of the ETFs here was bots. This was the AI ETF, and I remember adding it to my hot list a long time ago. We added it into our hot list because subscribers were like, hey, we need to get an ETF, sector ETF on it. Literally everybody was asking for it right when it peaked out. I'm like, this is usually what happens when everybody wants it at the same time. It's usually done most of its move, and it really hasn't made any new highs, just nominal new highs. It's gone nowhere. So I just feel like we're getting back into this similar situation with this tech in the stock market in general, that we're in this kind of just this drift higher seasonality wise. It's helping lift things. People are in a positive mood. They want to invest and buy some stuff. But overall, I just feel like we're getting closer to kind of the market wanting to top out. And NASDAQ is really tough to read right here. I don't know where it's going to go, because it only takes one of these big tech companies to completely mute the index. So it's definitely much more of a volatile and wild card compared to the SP 500. A really good kind of view of this is if we look at, if I look at the QQQ and we just look at this price action here, the NASDAQ's barely broken to new highs. And when we look at the SP 500, it's more of a broad indicator. It broke out a long time ago and it just keeps running higher. And so that's just telling us that the technology is definitely holding the NASDAQ 100 back, and it's going to hold a lot of the market back.
So let's look at some of the individual names, and I want to look at the high beta names. You mentioned Nvidia, and that's been the poster child for 2024. And when we last spoke, it was at $125. You said it was going to break out. It actually got up to $152 intraday, but it's been under pressure here in the last few days. Mm-hmm. What are your thoughts on this one?
Yeah, I mean, Nvidia still looks pretty good. It's definitely performing better than the NASDAQ 100. It is kind of testing this 150-day moving average, so it is at a support level. It still has a bullish chart pattern, and if we just kind of draw a line across where these lows are, you can see we've got these highs, we've got this high, we kind of broke above it and bounced. So we're testing a support level, not only the 50-day moving average, which I find is a fairly significant level, but just horizontal support where it's hit resistance or support. So I still like it. I'm not a big fan when something gaps up to new all-time highs, runs up and then gets slammed. That's not a very bullish sign. Usually means we need a pause or pullback, and that's what we're getting. So we just need to let this finish digesting, but it still looks good. Nvidia still has great sales. We're infancy stage, I think, in the AI space. So there's tons of upside potential in terms of them doing sales, but how much is it already priced into the stock is the big question. So overall, it's having a pullback within an uptrend. It is very sensitive when this type of stock like Nvidia, which is very herd mentality, general investors just buy on the news and they panic right away. When you see the market sell off, we see big volume spikes to the downside. It just shows how sensitive people are. And it makes for some great upside potential, but the sell-offs are really strong. So I'd be a little weary about Nvidia. If you're a conservative investor, to me, I think it carries a lot more risk, downside risk than upside right now. I think the market could push a bit to the upside going into the end of the year, but I do think this whole space is going to take a bit of a breather, continue to take a breather. It hasn't really had a big move above the highs that we saw earlier in the year.
The other stock I want to ask you about is MicroStrategy, MSTR. It's seen as a proxy for Bitcoin. And Michael Saylor is the founder and also the chairman of this company. And I'm not sure if you saw this, but he came out with a plan. He refers to it as the 21 and 21 plan. He wants to raise $21 billion in cash and equity and raise another $21 billion in debt and put the entire proceeds into Bitcoin. He's already raised $5 billion, but this stock was up 500% on the year. It has pulled back here in the last few days. What are your thoughts on this?
Yeah, I mean, it's not my type of thing. I don't follow it too closely. I mean, people who just go all in and just want to focus everything around one volatile asset is not my type of thing. He's really just catering to me. He's just catering to the masses. Anybody who wants to get involved in Bitcoin and get sucked into the hype, and they love to hear about it all the time, and they only want to hear what they want to hear, which is all positive, and everybody's buying it and all that stuff. Yeah, the stock's had a big move, but it doesn't look that bullish anymore. That looks very parabolic. Looks like what goes usually straight up, especially on crazy, insane volume, usually wants to come straight back down. This is just a strategy that's great for sucking in the masses and creating huge moves, but I don't think it's something sustainable so much. I mean, obviously, if Bitcoin wants to keep going up, this should keep tracking higher as well, because it holds Bitcoin, but it's just a fancy way to get into that space. And I wouldn't say fancy, it's just a lucrative, risky way to get into it. I'd rather just buy Bitcoin myself, which a week and a half ago, I did buy Bitcoin for the first time in like 10 plus years. So I like Bitcoin, but doing something like this where you're catering to somebody who goes all nuts about it and raising tons of debt and buying into crypto, like the crypto could crash. It could go back down. And then what's going to happen to this thing when there's tons of debt and all that stuff? And so uh, definitely it's drawn people's attention. I see it in the news all the time, but it's something I wouldn't even touch. So
The other interesting thing about this stock too is when you break down the balance sheet and you look at its assets, and it's trading at a significant premium to the net asset value of its Bitcoin holdings.
yeah,
So it's highly overvalued according to a lot of analysts, and
yeah,
it's going to be interesting to see what happens here in the coming weeks and months.
for sure.
I
This type of
also think
thing.
it's interesting that when you look at the markets from a risk on, risk off point of view, Michael Saylor is going all in on Bitcoin. And then you have Warren Buffett, who's at the other end of the spectrum, and he's raising cash. He's sitting
Yeah.
on $325 billion in cash. So it's going to be interesting in 2025 to see which one of these investors wins out.
For sure. I mean, we see Buffett's gone into cash. Let me just see if I can pull um, this chart right here. Let me just see if I can pull it up, showing how Buffett moves into cash. The way he moves into cash, I mean, it's big. Every time he's done it in the past, we have seen. Let me just see if I can make this a little bigger. So we see him raise a ton of cash, and then there's the dot-com crash. He raised a ton of cash. The blue line going up is how much cash he's raising, and then suddenly we have the financial crisis, and now he's raising a ton of cash again. And I think it's just a matter of time. He's no idiot, and he has a pretty darn good team. So if they're raising a ton of cash, definitely should be aware that something lurking is coming. These big investors, they have to move way before the market does. They have so much money. They have to like leg into these positions, meaning slowly sell positions so they don't kill the market. and stockpile cash. And so all that is happening. They're starting to do that. I mean, we've raised a lot of cash. We have a small position in equities, knowing that this market eventually is going to have a huge correction. The question is when, and until then, we just have to continue to take advantage of the uptrend and manage our positions. But this is a big warning sign. Like you get advanced warning with what Buffett is doing. But people are usually so short-term basis, James, that they're like, oh, yeah, he's been raising money forever. But he's not a trading indicator. He's just telling us that there's a shift coming and he's preparing usually a year or two or three ahead of time, because he's got so much capital and they're very defensive. They're all about protecting capital, to some regard. They just do it in a bit different way. A lot of it is just raising cash.
Now you mentioned Bitcoin. So let's take a look at Bitcoin. And you said you made your first investment in it.
I wouldn't call it an investment. I don't invest in Bitcoin. But yeah, so the reason I got into Bitcoin and is simply because of the monthly chart. There's a few things at play here. So if we take a look at Bitcoin and we look at this monthly chart, there's a couple major things at play. You could say here there is, from a technical standpoint, a chart pattern. We have this beautiful cup and handle pattern. It is known as one of the strongest, most bullish chart patterns, pointing to higher pricing. We can also just look at it that there's a huge run up and that this is a bull flag. And a bull flag, whatever the distance from the bottom to the top of the flagpole, once it flags down, that run up distance is going to be the same for the second half of the move. So the bull flag tells you, hey, we're in an uptrend and it's halfway. So now you have the second half of that move to benefit from. And so if I was to just take the low that we had for Bitcoin, go up to the high and down to this low, it tells us where this next upside target is, which is about 109,000 for Bitcoin. We had our first target. So more or less a couple of weeks ago, we got in just as it was starting to break out and we caught the first move. We sold some of our position at about 87,000 for Bitcoin. Now we're shooting for about 108,000, just a little bit below that level as our next target. And so I like this pattern for a few reasons. First of all, it's a super strong chart pattern. I haven't traded Bitcoin in forever. Actually, I didn't even trade Bitcoin. I bought one of the funds for it. I don't even know how to really trade crypto. I bought it years ago, and that was the only time. So I'm trading just a fund for it that's publicly traded. And what I like about Bitcoin when you have a chart pattern like this is it's just like that stock we just talked about. It's herd mentality. It's got the whole world's attention. It's got kids, it's got seniors, it's got investors going nuts. And so when a move starts, there's so much exuberance of everybody just piling into this market. And so I'm just taking advantage of the herd mentality going bananas and driving this thing to the moon for a really, really high probability trade. So now we're just got to let it continue to mature. It hit 100K, pulled back, which is what I talked about with subscribers saying, listen, expect it to pull back a bit because that's where it's a whole number. A whole number is something where investors say, hey, if it hits 100K, I'm going to sell a little bit. And so that's what we saw. It came up to this 100K mark. And then we had some sellers come in and locking in profits and just pulling a little off the table. And so now it's regrouping and building a little bull flag for that next push up, which should bring us about to 109 or 113,000, depending on how we draw it on the chart. So I like Bitcoin just as a trade. I'm expecting to be in and out of this in 1 to 2 months tops. Ideally, next week it pops and takes off and I get out and it's just a trade. So it's all it is for me.
I want to look at interest rates now. The 10-year has been very volatile in the last few months. It's gone from a low of 360 up to 450. And a lot of this volatility has to do with Trump and the policies that he might implement in the coming months and years. And some people are saying lower taxes and higher tariffs will be inflationary, and this is going to drive rates higher. But when you look at the 10-year or when you look at the TLT, which I believe is the proxy for the 20-year,
Yeah.
what's that telling you?
I mean, it looks like bonds are trying to carve out a bottom, which means interest rates should have most likely topped. We're starting to see bonds just kind of come to life just in the last few days. It's trying to carve out a bottom. More or less, I would still steer clear of bonds for a little bit. There's a lot of things under play. First of all, it's not in an uptrend yet. It is actually in a kind of a bottoming phase. If we actually take a look at the stages of the market, if we look at the stages, it's already gone through a stage 4. It's sold off from the COVID spike and it's done this whole sell off. And now it's in this stage 1 basing formation. And I shade that orange and red because it's really difficult. It's sideways, it's choppy. It could go on for 5 years. It could only last a year. Who knows? It is a dangerous time to be involved. And that's where it is. We had the blow off top with COVID. It's gone into a bearish phase. So until it starts to move higher and potentially starts to break these highs over here around this 100 level, I know it's quite a bit of ways away already. There's some potential upside there, but it's not about trying to pick a bottom in a trade. It's not about saying, oh, I bought it down here or back over here or here or somebody who bought it over here. This is 2 years ago. Yeah, they got pretty darn close to the bottom, but they've just wasted like 2 years of time. There's a lot of other plays to be in to make money versus saying, oh, I nailed the bottom. So what I do is I wait for bonds to eventually start to move higher and show signs that it's gone from a falling market to more so of a rising market with higher highs. And I want to kind of see it break out through here. And then it creates a launch pad and starts a stage 2 bull market, which means rates would be falling. The economy is probably weakening. But again, how Trump is going to do stuff is there's a lot of wild cards. Nice thing is it doesn't matter what he does because I follow price. So we don't have to predict where it's going. We just wait for a trend to start. If it's strong enough, we'll take advantage of it. But obviously tariffs, jacking up tariffs could create inflation. And depending what happens with the rates and the economy, there's a lot that's going on there that could really kind of mess with things to keep interest rates potentially high, which means bonds will stay in this basing formation for potentially a much longer period of time, maybe another year or two for all we know.
Okay, let's look at oil now. Oil's been hanging around this $70 level for a good part of this year. And Trump's pick for Treasury is Scott Bessent. And one of the policies that Scott has put forth is he's got this 3-point economic agenda. One element of which is he wants to increase oil production by 3%. The US is already the world's largest oil producer. They produce approximately 13 million barrels a day. He wants to increase that number by 3%. But what do you think of the oil chart in here? Where do you see it going?
Yeah, I'm pretty bearish on oil. I'm under my analysis shows from the stock market and what different assets are doing to some economic data kind of slowly weakening and showing the individual is struggling. I believe we're going to go into a recession. And to me, we've had a kind of a double top scenario. It has sold off. It's been pausing and stuck along this kind of support level. I believe we're going to see a breakdown into the low 60s and potentially go a whole lot lower later next year. But it is kind of stair stepping its way down. It's trying to hold. This is a very, very critical level. This kind of around 65, 66 area. If it breaks this level going way back in time, we're probably going to see a pretty big unwinding event. I think we could even see a dip into the 50s. And it could happen pretty quick. I think it could be a big drop that happens. This is the daily chart. So we could see a drop like this, in a week or two and potentially be into the low 60s or 50s, because this is a very critical level. If this gives way, there are a lot of long-term investors who are going to give up. A lot of people are waiting and praying that oil finds support here. And people are talking about like $200 barrel oil, betting on the upside. And when they're wrong, they're going to have to get out and take a loss. And we're going to see oil fall very quickly. And what's interesting, James, is oil is hanging on to a thread at support. I think it's going to break down. Yet if we look at the energy sector stocks like XLE, they are trading up near all-time highs. And if we look at the monthly chart, we are back up to these nosebleed levels where back in 2008, everybody was expecting oil to shoot through the roof even more, and wars and uncertainty. We had financial economic weakness hit again in 2015, 2014. And right here, we are seeing like everyone holding energy stocks, counting on oil bouncing and taking off, which I don't think is going to happen unless World War III hits and nukes start going off or something. I think everybody's positioned for higher oil. They're positioned in these leveraged energy stocks. And I think they're going to get caught on the wrong side. And there's going to be potentially a big unwinding in oil, huge unwinding in energy stocks. There's a lot of levels here. If we were to just look at all these little candle lows on these charts, each one of them is going to have a set of stops in place, meaning that if price breaks this pivot low, some people are going to have stops triggered that's going to send it even lower. And when there's a cluster of them close together, one can trigger the next because it forces price to drop very quickly, and you get this waterfall sell-off. So there's a huge disconnect between energy stocks and what oil is doing. And if everybody is going to be offside, if oil breaks down, energy stocks are going to crash very, very hard. And oil is also going to crash. They're two different groups of traders that are going to unwind their positions. So it's going to be very interesting, this energy space, unless there's a black swan event and oil does shoot higher. The energy stocks are trading at a level that they're kind of nosebleed territory right now.
Yes, it's when I look at the price of oil myself, it does feel like it's heavy. And in spite of what's going on in the Middle East and also Ukraine, it feels like it's under pressure. And if we didn't have the hostilities going on in these regions of the world, I get the sense that oil would be at 60 or even $50 a barrel.
Yeah, I mean it's trading like dead smack in the middle of its overall range from pivot extreme highs and lows. So it's right in middle of no man's land. It's either you're stuck above it or you're stuck below it. And so this is a long term. When you go back in 2007, this is a very, very significant level. If we break down from here, I think we're going to go to $40 a barrel. I think we'll have a financial reset and all of that stuff. And there's a lot of opportunity to the downside in oil and energy stocks if that happens. There's a lot of potential in everything because there's going to be big moves across the board in stocks and commodities and real estate and currencies. So we are getting close to a major breaking point where things are just going to go haywire. And as long as you know how to identify it and pick the things that you understand and know, you can make some pretty good money, I think, in 2025. But most investors, I think, are going to have a volatile, scary financial year next year.
Well, lower oil prices would be great for the consumer because we are paying way too much at the pumps.
Yeah, it's crazy. It was $200 to fill my truck up the other day. My daughter was blown away. I'm like, how long do you have to work to make that? She's like, oh gosh. Yeah, she wants my truck in a couple of years. She's dying
And,
for it to pull her horses.
and that's one thing a lot of our US viewers don't understand. In Canada, we are constantly being taxed on after-tax dollars, and there's no other commodity that we pay more for than gas. It's just insane what we pay.
Yeah, it's pretty wild.
So okay, so you're negative on oil. What about nat gas? Because I'm reading a lot of positive commentary on nat gas.
Yeah, natural gas, I'll just go back to the daily chart here. Natural gas has had a really nice cycle high, nice kind of run to the upside. It's been kind of basing for a very long time, and stage one bottoming formation for the last year and a half, 2 years. It is definitely kind of up into nosebleed territories. We're up to levels where sellers typically come back in and drive it down. It is in an uptrend. When we look at it, it does have a series of higher lows. It has a series of higher highs. But I do think it's ready for some type of pause. If it can flag sideways, meaning it just trades sideways and holds its level here, then it's going to be poised and ready for another big shoot up to the upside. And I think we could see another leg higher. But right now, it is long term at a level where you should expect volatility. It could reverse down very quickly. Natural gas is kind of like known as the widowmaker. It moves so fast. It's really difficult to trade. And especially if you're like an equities trader and you have to trade an ETF around it. The ETFs just have contango, which means every day they lose value, almost like an option because of contracts rolling forward in the futures space. So I would say it's at resistance. And if it can build a nice launch pad, a sideways pause here for a week or two, it could actually bode really well for a breakout. And if it does break out, then we're probably going to go to $5. So there's a really nice upside potential if it can get traction. But right now, to me, it's a high risk play. It just hit resistance. It's pulling back. It's trying to digest and eat through that resistance. And so it really just needs a bit more time. It needs to build that flag, which is kind of like a step for the next leg higher.
Okay, we got to ask about gold, something that's very near and dear to my heart. But you just told me, or you mentioned earlier, that you're not bullish on gold. You're negative on it. Tell us why.
Yeah, so I am bullish on gold, depending on how you look at it. Now, if we take a look at the monthly chart, the main reason I am bearish on gold is simply because when we use Fibonacci extensions and we look at from when gold had its last major low and major high, and the pullback, it brings us right into this, 2,700, 2,750 area. I think you and I talked about this last time, months ago. Um, and this is going to be the level where gold should hit resistance and start to sell off. And we've done that, and now we're starting to see it sell off. This is the monthly chart. So this is a huge multi-year pattern. I talked about this level 2100 and this 2800 way back over here when we broke out into a new super cycle for gold, saying these are the next two levels. Usually you hit this first one, you'll pause, and then you'll run up and hit the second one. So this is when I look at the monthly chart, I believe we're into something like this now. I think we're on the cusp of a financial reset, which will pull gold back. I think gold could pull back fairly significantly, 15, 20 plus percent, as the stock market and the economy unwinds. And then eventually it'll stabilize. And then I think we'll see it take off into the $3, $4, $5,000 range. But that's the bigger view. If we look at it from a daily chart, it is still clearly in an uptrend. It has hit this resistance area. We've seen big volume selling, telling us that the long-term investors are looking at the same type of thing. They're locking in gains as momentum kind of runs out at this 2750 level. So right now it needs to build a bit of a launch pad. It needs to flag out and consolidate, build however it's going to flag, if it's going to flag down or if it's going to kind of coil sideways and build like a pennant. It needs to build a launch pad here for it to have another push higher. So overall, I think you could still hold gold. I just think it carries more risk because the move is over. The main easy multi-month rally is kind of done. And so now it carries just a little bit more risk because I think most of that upside is finished. We're in a time where the gold can do very well. It can hold its value and potentially push back up to these highs, maybe push a little bit higher, simply because people are nervous globally. And if the stocks start to sell off a bit, we're probably going to see gold become a defensive play and move higher. I don't think it's going to rally and scream higher. I just think it'll hold its value and move back up to these highs, maybe poke to a nominal new high. So there's maybe a couple $100 upside potential in gold. But I wouldn't expect like a huge rally from this point.
Okay, and we have to look at silver. What are your thoughts?
Sure. Yeah. So silver is a much noisier chart. I always look at gold as my barometer to trade silver or miners. Silver is a pretty ugly chart. It's pulled back. It's not quite nearly in favor. It is kind of settling down at a short-term pivot zone, a support level. If we look at these wicks and the price action, we had a high here. We had a lot of consolidation through here. We had a pivot high. And so now it had a little low here. So it is above support. So we'll need to see if it can get some traction. I would expect we're going to see silver and gold, hold their ground and trade sideways for the next month or two, probably 2 months. I think going into the end of the year, we've seen a big move of people piling into Bitcoin. So I think money's been coming out of gold, and that money coming out of gold and silver has been going into Bitcoin. I think it's been going into small cap stocks. But as soon as the stock market starts to have a bit of weakness, or people think that stocks have had enough of a run, we're probably going to see money coming out of Bitcoin and out of stocks and start to flow back into gold and silver. And so I think we're very close to that point. And I think we'll see silver kind of trade sideways in this range come, December, January. And then I think the stock market hopefully is going to actually stall out. And then eventually we'll see everything kind of roll over. I think we'll see silver sell off with the stock market when it does sell off. I mean, silver pulled back 65% in 2008. So it's far from a defensive play. Even gold losing 34%. It is not a safe haven play. It is a defensive play that works during sweet spots in the market, but you don't hold on to it, anticipate, and think it's going to protect your capital.
Yeah, I never understand the move in silver. I never play it myself, but because I think you hear such a bullish narrative on
Yeah.
silver,
Yeah.
and yet it can never break out of this price. Like it's still nowhere near its all-time highs of $50. And it just seems like there's so much of it being produced and just dumped on the open market. It just can't get going.
Yeah, I mean, I've been in the markets for like 26 years, and it's always been the same story. Everybody's stockpiles are heavy weighted in silver. They're expecting it to like have this huge short squeeze and go to the moon. It's just, it's a, yeah, it's a weird asset that everybody has the dream, hoping it's going to have that blast off at some point, but it really is just a speculative play, and there's lots of it. And it really just kind of follows gold, and it'll outperform when it goes because it's kind of like the herd mentality type of play. People, they get all worked up and excited. They buy a whole bunch of it. They all in herd mentality. So silver has this, it's a small market, so it explodes very quickly when everyone piles in, which is what I kind of see, this similar in Bitcoin. So it is a noisy, ugly chart. There's no doubt.
I love when people use these ratios, like the gold silver ratio, and they'll say, well, this is where it was at one point, so it's got to go here, right? Like,
Yeah.
people don't realize you can just pull these ratios out of your ass, right? And they mean nothing.
Yeah, I've never used it for anything. It can help paint a story if you want to have a bullish or bearish bias. But I mean, you can spin any chart in any direction if you wanted to. It's really understanding the underlying trends at play and the characteristics of each asset and not having a bias. That's the biggest thing. Is I'm super bearish on the markets. I have been for like a couple of years, several years. But we're still long stocks and we're still riding it up. It doesn't This is what people can't break apart. They think something and then they position themselves for it because they want it to happen. And that's where I kind of break apart from the masses. Is I'm really bearish and I think something ugly is coming, but I am still going to ride this market higher until the chart and the price actually tells us, hey, it's actually going down now. Get out, and now we'll take advantage of the scenario that we've been looking for and expecting for a long time. But people just, they have to follow their emotions. They can't get away. Their emotions just control their trades, and they have a bias. And of course, most people, like in silver and Bitcoin, especially Bitcoin channels, it's like um, they all say the same thing. They're all super bullish on it. They just don't shut up about it. Like they all say Bitcoin's going to 1 million, and everybody's just always bullish. I'm like, they're in this bubble of everybody wanting the same thing, and they think if they all keep talking about it, it'll happen. And maybe it will, but you don't. The way you analyze things and have to trade is you have to see the other side. You need to know both sides, and then you need to actually um, make sure you're protected from both, or know how to get into each one and follow a strategy. It's, you don't just blindly jump in because everybody's hoping it's going to go higher.
So I want to ask you about uranium, and we can take a look at the Sprott Physical Uranium Trust. It measures the spot price of uranium, and it's very similar to what you mentioned earlier about the oil price. The commodity's not doing well, but the stocks are doing very well, and the stocks are pricing in a much higher uranium price, but we're not really seeing follow through. And it's also a very small market.
Mhm.
And so it can be very volatile at times. But when you look at spot, what do you think of this chart?
I mean, it looks really strong. It doesn't go back very far. It's a fairly new fund, but it's at a big pause here, or a base. It's built a launch pad. It's rallied up, and now it's flagging down in the opposite direction. So this is a fairly controlled pullback. I like it. It sells off. It kind of drifts up. It sells off. So it's in a distribution phase right now. Every time it rallies up, somebody's, groups of people are unloading shares and trying to work themselves out of the position. But in the grand scheme of things, this is a bullish chart pattern. This should eventually find a bottom and start to rally up and head up towards $30 or so. Probably would be the Fibonacci target, somewhere up there. So there's some really good potential in this space. Right now it's in a downtrend, so I wouldn't touch it. I'd wait for it to. I don't use this platform very often, but I would wait for it to like build this base where it starts to like break above here and has some pause or pullback. And then like this is where I would get excited, would be probably after it breaks to the upside and then pulls back and starts to turn up. I'd be looking to like get in somewhere here and catch that move, which is what Bitcoin did. Very similar type of play. You wait for it to turn around, tell you that the trend is up, it builds a bullish chart pattern, and then as it starts to run, you hop in. That way you get like imminent return on your money, versus trying to pick a bottom through here and you have to ride through that roller coaster. I'd much rather pay a higher price and watch it just take off from like the day I get in and hit my targets and then get out of it, versus like moving into it, waiting forever, hoping I pick the bottom, hoping it is a bottom. And so this is what most people don't want to do, though. They always want to try and pick a low. They try and pick a low here, and then they double down, and then they triple down, and then they do all this, and they have this terrible position and a terrible experience versus what I focus on is wait for the trend to reverse, build a launch pad. As it starts to take off and all the signs are there, you hop on it and you get that instant gratification. But we give back huge. We miss the bottom. Everybody wants to try and make this money and say, "Oh, I want to get the bottom." It's not about making the most money, in my opinion. It's about being able to make money consistently and not carry a lot of risk and don't waste time. We can always make money back as traders. It's not that difficult, but we can't get back lost time. And the last thing you want to do is wait 2 or 3 months when you could be in something else. A good example is like here is the SP 500. You know, we've seen the SP 500. This is my strategy here, and we had a buy signal SP 500. It's moved up 5.5%. We got out of the TLT ETF because the market was telling us that money was moving out of bonds and going into equities, and it's a huge difference in terms of returns. Just knowing which asset to get rid of and then moving into the other one is super important. And so that's kind of the core focus, is to make sure you rotate to whichever asset is moving up. And right now, uranium stocks are in a short-term downtrend. They might be forming a bottom. I'd be more interested in it once it gets to 2050 or even 21 as it starts to, however this peak high goes, I'd be looking to get in somewhere at a much higher price for that imminent move.
So in other words, you're suggesting to investors that you don't get fixated on one asset. You're not going to be a gold bug. You're not going to be a crypto bro. You go where the action is.
Yeah, exactly. I learned a long time ago that it doesn't matter how much you love something, man, it will take you for a terrible ride and you can lose all your money on it. So I'd much rather just hold it and love it when I have it and it's performing. And when it's not performing, just sell it. We can always buy it back. One click of a button, it's like $1 with Interactive Brokers. You can move right back into the position. So just get into something that's moved that you like. You should follow multiple assets because there's always going to be, you know, generally there's something going up. And if you're just focusing on one asset class or one pocket of commodities or stocks, they can be going down and trendless forever. So you have to be able to say, okay, you know what, right now I'm not looking at uranium. I'll look at it in maybe 2 or 3 weeks when this chart is turned around, and then I'll be excited about it again and I'll ride it up. So that's what I do, is I move around and I just get excited holding what I like when I own it.
Chris, I now want to get your views on the market overall. You've said a couple of times that you're very concerned about the market going into 2025. You also said you're expecting a recession. And in 1996, Alan Greenspan coined a term called irrational exuberance, and Robert Scheller also used that for his book title in the year 2000, and the whole book was based on the dot-com bubble. And when you look at the market now, it's been risk on in a big way, and we've seen some of the moves that we've already discussed. MicroStrategy up 500% on the year. Palantir, we didn't even discuss that one, but it was up 250%. Nvidia up over 200% on the year. And then just recently, I'm sure you saw this news, but there was a cryptocurrency investor by the name of Justin Sun. He paid $6 million for a piece of art, which was effectively a banana duct taped to the wall. And when you look at these signs, um, does that concern you at all? And do you see any similarities to what you saw back in 1999 and 2000?
Yeah, I do feel like we're kind of similar back to the tech bubble for a few different reasons. I mean, we are definitely tech driven, although technology now is a real money maker versus the tech bubble was a bunch of dead companies. Um, I think we're back into one of those big cycles where equities are like the most valued and commodities are the most undervalued. So I think there's going to be a pivot and a shift there. We have bubbles in real estate, just like 2008 and back in 2000. Um, and I don't quite think we're in the exuberant phase yet. I think we're inching into it now that Trump is kind of in. He's re-sparked people to take risks. Bitcoin's breaking out, and so people are going to start chasing all kinds of stuff. A lot of people have Bitcoin. A lot of people are getting sucked in with this move. We're seeing it in stocks, small cap stocks. People are piling in. So, and of course, this $6 million painting of a banana taped to the wall. It is this, I think, the tipping point. I think we could see the stock market have a really big push, but a lot of commodities have maybe one big push. as everybody piles in and they think, okay, new year, everything's going to rally. I'm making money. So I do feel like we're getting close to that. I don't think it's quite there just yet. I'll get a sense for it uh, when a lot of people are calling me and asking me what should they buy, or I just bought this. And, usually I have all kinds of friends and family start sending me messages. And usually that's the sign. I'm like, okay, here we go. If they're getting in and they're tinkering with this stuff right now, this is like, they're the last of the people to pile in. So I think we're close. And this is usually what happens. We'll see everybody move in and we'll see stuff move very quickly to the upside. And everybody does it who generally isn't involved in these types of positions, these types of investments. So I think we're getting there. And I think it's going to happen. I have a feeling it's going to happen in the next like 60 days or so. Come the end of January, I think we're going to see probably some pretty extreme sentiment and probably some sharp price reversals.
And there's over 9,000 cryptocurrencies now. And I'm not sure if you saw this, but the Haktua girl just announced that she's going to create her own cryptocurrency.
Yeah, that's crazy. I mean, it's life is not that easy. It's not that easy to make money.
So a lot of our discussion thus far has been based on the U.S. economy, and you and I both reside in Toronto, and for the just for the benefit of our U.S. viewers, the Canadian economy has been in decline now for many years, as measured by GDP per capita. It's been in decline for 5 years. Labor productivity has been in decline for 10 years, and in order for your GDP to grow, you need efficient labor productivity, and we're not seeing that. But what are your thoughts on the Canadian economy?
Um, it's tough because I kind of live in my own bubble. I don't really go out and do a lot of stuff in the economy, and I don't follow really economic data that much. I think it's still purring along. I know it was in Las Vegas recently with 36 big entrepreneurs from all over the world. They're from all kinds of different countries, overseas, everywhere. And they're all seeing the same thing. All their businesses have slowed down. They're all tightening on to run as efficient as possible. They just said something changed last year, and now everything is you got to be really efficient, be very smart with your money, don't spend it, cut back. So I do feel like things are slowly weakening, but people are still spending, and they're racking up debt. We're seeing record highs on full maxed out credit cards, and then people are going delinquent. So a lot of times there's people, they just don't pay their credit card and they have a small balance. But right now we got like the highest level of maxed out credit cards and they've gone delinquent. So people are definitely using lots of borrowed money and now they're not paying it back. And the fact that residential homes are starting to have defaults on mortgages. In Canada, it's a big thing because our mortgages are generally 3 or 5 year. The majority are 5 year. We've come to that 3 year window since COVID bubble, and people are now having to renew, and their mortgages is like 2, 3 times higher, and they can't afford it. And so, like in my town, we went from like 60 to 80 homes for sale a couple of years ago. There's over 600, and nothing's selling because nobody wants to like bring it down to what market value is. They all think their homes are worth a fortune, but the bottom is about to fall out because people can't carry these homes anymore. They're too expensive with the renewed mortgage. And a year and a half from now, when the 5 years mortgages come up, which is the majority of Canada, oh man, it's going to probably be a shopping spree for an investor who's looking for quality homes. You pick of the litter. But home prices, I think, are going to be under pressure for a couple of years. It's going to be a great opportunity, but right now the economy is still purring. It's hanging on to a thread, but I do think the bottom could fall out and things start to look and feel ugly very quickly.
And the same thing is happening in downtown Toronto with condo sales. Like uh, the number of condos on the market, I think it's up 30% year over year, and they're not moving. And even though
Yeah.
they're dropping the price by 10, 20%, they can't move them. And if that's why the Bank of Canada is so concerned about interest rates, and they're trying to get the interest rates down because they know in a year or 2 years from now, there's going to be a real storm on the horizon in terms of refinancing when it comes to these mortgages.
Yeah, it's going to be a bloodbath. Like if the rates don't drop, if they don't drop them, it's going to hurt Canada. And Canada is more incentivized to drop them because it's going to crush the banking system. It's going to crush every investor with a house, any person with a house.
And the other thing that's happening too, because we are dropping our interest rates so much faster than the US is, our dollar has really come under pressure. And I can't get over the cost of traveling to the US or to Europe now. It's just insanity. We're paying like I think a buck 45. And you and I are both skiers, and I recently saw a stat. I got to send this to you, but it was about the price of lift tickets in North America, in the US specifically, in the last 10 years. And the price at a high-end ski resort like Park City or Aspen, it's gone from $150 to $300 just for
Wow.
one lift ticket in the last 5 years. And so when you take in the price of inflation and the price of, or this FX that we have to pay now going to the US,
Yeah.
it's impossible. We can't travel there.
Yeah, it's crazy. I just came back from London, and I mean, it's two times what the Canadian rate is, right? Every dollar there is $2 Canadian. So it's pretty wild. I mean, you look at the currencies, the US dollar continues to go higher and higher, and every other currency has been on a downward slope and losing value. And I think that's one of the big headwinds, I think, for the big Magnificent Seven is these big tech multinationals. They're struggling to get international sales because they're based in US dollars, and it's so expensive now to buy in US dollars for other countries. So they're going to have to start doing discounts. They're going to have to change pricing for different countries. So there's a lot of headwind. And I mean, I carry my investment account in US dollars because I believe the US dollar is going to continue to move higher. I think it's actually going to, I think we could actually see like a $1.60 exchange for a Canadian dollar to the US. Like, I think it's going to be great. So I want to continue to hold US dollars because typically when we have chaos and global crisis, the dollar tends to do very well. And if oil is going to fall, the Canadian dollar moves quite a bit with the oil price. And if oil is going to fall, that means the dollar is going to, the loonie is going to fall. And I think there's great potential actually in holding just the US dollar currency on its own.
Well, Chris, that was a great discussion. And I want to thank you very much for spending time with us today. It sounds like 2025 is going to be one hell of a year, so I'm looking
Mhm.
forward to it. But if someone wants to follow you online or check out your services, where can they go?
Yeah, they can go to the Technical Traders YouTube or thetechnicaltraders.com, and I share my charts. Every trade that I put on, I share as a trade that I do with my portfolio. So you're really just doing what I'm doing with my own capital. So it's a very efficient way to trade. I focus on ETFs only, and yeah, you'll highly educational. I do mentoring sessions twice a month. We can get on and talk about the markets, ask your questions, and I just kind of walk us through the markets each day with 5 to 12 trades a year, depending on the waves that roll through the markets.
And once again, there's a link below in the show notes. Chris, thank you.
Thanks, James. Take care.